What's going on with Toronto's rental market? Is there anything affordable left in this city? In this video, I want to go over the Toronto real estate rental market for the third quarter of 2023. So this is what happened over the months of July, August, and September of this year with respect to the rental market. Now, keep in mind the data I will be sharing with you is based on the condo market. However, that information also translates to freehold. So whether you're renting a house, a portion of the house, a basement apartment, it's really applicable across the board in the city of Toronto. The two things that I want to highlight in this video are the lack of affordability in the city based on where rents are. And the second thing is, from a real estate investor perspective, is there an opportunity right now to get into the market based on the current rental incomes that we're seeing across the city? Before I get into the data, I'm Nawar Naji, a real estate broker in the city of Toronto. If you would give this video a thumbs up and a subscribe, I would greatly appreciate it. All right, let's take a look at the data that was released by the Toronto Regional Real Estate Board for the third quarter. And again, keep in mind, this data is for condos, pretty much the condo market across the board. And I'll give you a high-level overview, then we'll get into the actual city of Toronto, the downtown core. A couple things what I want to bring to your attention here is to take a look at is you can see the rents are extremely high. The bachelor apartments were up 9.2%. The third quarter 2022, they're renting for $2,057. Now they're at $2,246, and this is across the GTA. And you'll see that it is much higher in the city of Toronto. One bedrooms, they're up 6.1% at $2,633. Two bedrooms are up 7.8%, $3,430. And then three bedrooms are up 14.5% to $4,739. Now, the other thing to notice is, again, across the Greater Toronto area, the percentage of one bedrooms and two bedrooms. So that also encompasses 1+ dens and the 2+ dens. So it captures quite a bit of portion of the market. And you can see those two, the 1 and the 2 bedroom, which again covers the plus dens, is 13,000 units leased out of the total 14,000. So it's pretty much everything. As you can see there, only 633 bachelors leased and 3 bedrooms, 463. Now keep in mind, the developers don't build that many 3 bedrooms, so that number will continue to be low. However, it's attractive because of higher rents. You'll have people co-living together. So instead of a single person or a couple renting a 1 bedroom, 1+ den, they can co-live together, a bunch of friends, bunch of colleagues. They can rent a 3 bedroom and each person rents 1 room, and they can split the rent that way 3 ways. So on a 4,700, let's call that about $1,350 each if they split a 3 bedroom rental, versus if that one person rents a 1 bedroom, they'll be paying pretty much double at $2,633. So this is where that cost saving comes in. And people can, based on their situation, co-live with other friends or colleagues, and they will do that to save significant amount when it comes to their rental monthly fees. On this page it's more specific. So we're diving down into the city of Toronto. And if you look at Toronto Central, 2 main sections, the C1 and C8. So C1 is Yonge Street, west to Dufferin, up to Bloor, down to the lake. C8 is Yonge, Bloor, DVP, down to the lake. So the east and the west core of the city of Toronto. And again, you'll see that's where the majority of the volume of rentals are. So in Toronto Central, out of the 12,000 and let's call it just 13,000, you have 5365 on the west side, and then another 36 on the east side. So that puts you at 9,000 out of the 13,000. So again, that's the majority of the condo rental market. And you'll see that the bachelors, in the previous page, it was 2,250, but you can see, sorry, 2,000 and change. You'll see in the core, it's higher, 2,330 west of Yonge, just about 2,300 east of Yonge. Then once you move to the 1 bedrooms, you're looking at 2,800 versus 2,652. It's a little bit, quote unquote, cheaper east of Yonge, but still up there. And then once you get into the 2 bedrooms, you're looking at $4,000 a month on the west of Yonge, and then 630 east of Yonge. And then once you get into the 3 bedroom, you're looking at 5,300 and 5,800 for west versus east. Now, when you look at these numbers, if you're a tenant, it is difficult, it is expensive. But again, this is because of lack of affordability. With higher interest rates, people need homes, people need a roof on top of their head. So if they can't qualify to buy their first condo or a condo downtown, they'll be forced into the rental market, and higher demand, as you can see here, has pushed up the prices significantly compared to the third quarter of 2022. Now, how do we make sense out of this data? A couple things. One is, again, from a tenant perspective, a first-time buyer, it is expensive, it is very difficult because of lack of affordability and not being able to qualify at these extremely high mortgage rates. From a real estate investor perspective, I see a few opportunities. One is if you own or buy a condo that was built after November 15th, 2018, that is exempt from the rent control. So if you issue the N2 to bring rents up to market value, then that can improve your cash flow, especially if the real estate investor has a variable mortgage where their payment has gone up significantly over the last year and a half or so. This is an opportunity for them to have the revenue offset the higher carrying cost by issuing the N2. If that unit, again, it could be a condo, but it also could be part of a duplex that did not exist before November 15, 2018. On the second opportunity that I see is if you are looking to invest in real estate, where I see the opportunity is in the freehold market. Now, these rents that are published by the Toronto Regional Real Estate Board are specific to the condo market. However, looking at rental data for freehold, so semi-detached, detached, townhomes, where there are 2 or 3 or more units, the rents are high. They're not exactly the same, they're a little bit different, but the rental income is strong. And keep in mind, with that type of investment property, there are no condo fees. So there is savings because you're not paying the condo fees. However, the purchase price is a bit higher compared to condos. I'm seeing rents on 3 bedrooms anywhere from $37 up $4,000 a month. And then downstairs, if it's a 1 bedroom, $1,700. I've seen $1,900, almost $2,000 for very large, call it 1 bedrooms. I've actually seen even bachelor basement apartments going for $16, $17, which was pretty surprising. Now, if you got a 2 bedroom downstairs in that basement apartment with a separate entrance, you can get $2,200, again, depending on the finishes and the features. So there's significant revenue that could be made from a duplex. And again, you could be making, call it about $4,000. And if you have $2,000 downstairs, you could be making around, again, depends on the location and the finishes, $6,000 on a monthly basis coming from that duplex, which is very good rental income to offset the higher cost of borrowing. Now, from a real estate investor too, keep in mind the house prices have been flat, they've come down. They really were not into that bidding wars and competition market conditions. That'll probably come back once the Bank of Canada indicates they're starting to cut or will cut, which looks like it might be towards end of 2024 into 2025. So right between now and then, there is an opportunity. If you are well capitalized, if you can take on a short-term mortgage, whether it's a 1 year or 2 year, and then restructure your financing as rates come down the line. If you're looking to invest in real estate, feel free to reach out. I'd be more than happy to show you concrete examples with cash flow and capital acquisition numbers, and look forward to connecting with you soon. Thank you so much and have a great day.